it's often said in procurement we hide our light under a bushel, and I think it's really encouraging us to come out, do a better job of marketing ourselves and what we do, and I think you've given us a great insight into how to go about that. Next speaker, it gives me great pleasure to introduce Hadi Daoud. And this is coming at it from a slightly different angle. Everyone's curious about blockchain and the whole concept of cryptocurrencies. Hadi is not your typical procurement person. He's a 15-year-old who goes to Aotea College. He's been interested in finance and economics since he was 12. And he was introduced to the subject by his last primary school teacher. That interest for finance and economics has since expanded into the realm of blockchain technology and the impacts it may have on fintech. In this session, he's going to talk about the challenges to overcome the blockchain technology to be more widely adopted, potential solutions, regulatory challenges, and advantages and limitations of each. He's going to discuss what is blockchain, the impact of blockchain on different industries, challenges to overcome, regulations and scalability to name a few, potential innovative solutions, market analysis and market cycles, and a technical analysis. So, and there may be, if we can try and speed up, an opportunity to ask him some questions at the end. Would please join me in welcoming Hadi Daoud to the stage.
Thank you for the introduction. Well, as you guys probably already know, I'm 15 years old. I'm really into blockchain and cryptocurrencies. And just like to point out real quick is you might see that I've sprinkled a few memes across the presentation. Just understand that I'm still at that age where memes are used as a means of communication rather than means of entertainment. So you guys can take it both ways. So about myself, I'm cryptocurrency and blockchain enthusiast. I've built my own mining farm, as you can see there. I trade cryptocurrencies regularly, high performance computing and tech enthusiast. As you can see, there's two of my servers down there. I have a 40-core DL580 G7, and I like to play around with the computers every now and then. Very interested in economic trends and cycles, as well as the finance and stock market, understanding trends, that kind of thing. So my interests, I really enjoy looking at charts. They allow you to visualize cycles and doing technical analysis. We'll go into that in a bit more detail very soon. I like to look at trends quite a lot because they allow you to understand market functions, cause and effect, and fundamental analysis as well. Understanding the projects I invest in, obviously, because I don't want to invest in any Ponzi scheme or scam because there's plenty out there. Cryptocurrency mining, as I pointed out earlier, very interested in that myself. Macroeconomic cycles and trends, so I really like to look at the bigger picture. What I really like to do is just, observe trends and see, how its impact on the rest of the world can be. And also, lastly, trading cryptocurrencies, obviously. That's one of my hobbies I do in spare time. Sit on the computer and read some charts. So, obviously, a lot of you guys, if you don't already know what blockchain is, I just pulled that off the internet because it explains it pretty well. Blockchain is just an incorruptible ledger of economic transactions that can be programmed to record not just financial transactions, but virtually anything of value. So essentially what that means is it's pretty much just a big book, and the book is distributed to lots of people, so it's decentralized. So there's no one centralized point of failure and not one central point of governance. So now that we know what blockchain is, we'll go on to what Bitcoin is. So Bitcoin was the first cryptocurrency that used distributed ledger technology. It was initially created to solve the problem of double spending, which is spending the same digital tokens more than once. Probably anyone here in the fintech industry probably knows what double spending is. So he solved this problem by creating the blockchain, which was the first distributed ledger. It progressed later to have much greater uses, as we've seen now, and the potential disruptions and impacts it can have on technology and the industry as a whole. So it's peer-to-peer, decentralized, non-inflationary, and it's an autonomous and experimental distribution structure, so the way that the Bitcoins are distributed to miners, which are the people who process transactions. We'll get into that in the next slide real quick. So that's just a quick overview of how the kind of ecosystem functions as a whole. So you have miners, which are the people that process transactions, encrypt the network, and find blocks. Then you have the exchanges, which deal in fiat and other cryptocurrencies. And then you have your cryptocurrency wallet. Now, a bank, company, an institution, or a private individual can have a wallet. You can generate them yourselves online and store your Bitcoins in them. And then you can just download the Bitcoin. There's plenty of these wallets you can download online as well. And also one important part that's left out there is node operators, which they also play an important role in transactions as well. So what are the challenges that need to be overcome before cryptocurrencies and blockchain can become more widely accepted? So first of all, adoption. Whilst the crypto space is very popular amongst traders and speculators, volatility is one of the reasons why cryptocurrencies are not widely adopted for everyday use. Now, they are seemingly just speculative assets at the moment. A lot of them do have utility and function, but that utility and function can't be used to the same extent that it would be because it's so volatile. And obviously there is a lot of blatant manipulation that happens in the market. And the thing is it's not illegal, so you can find pump and dump groups, people that manipulate the price or inflate it. Some that would get you in jail if you did it in the stock market, but you can do it in cryptocurrencies. So the other problem is challenge that needs to be overcome is scalability. There's currently, you may have heard, there's been an ongoing debate on how to scale Bitcoin whilst keeping it decentralized. So there was some talk about increasing the block size. Now the issue with increasing, so the block size is essentially how many transactions the block determines how many transactions the block can hold. Intuitively, you would think that this would be a good thing for the network. But the problem is with it is that it leads to more centralization. So where do we find the balance between that? I think there was some disagreement in the community, and what ended up happening was Bitcoin forked into another coin, and that's actually the next point, which is forking. So what forking is essentially when there's a divide in the community and another cryptocurrency splits off. Now this can have positive impacts, it can have negative impacts, it can be healthy. Because they can, if a community is divided, they need to split. But it can also be controversial because a lot of these forks are kind of like get-rich-quick schemes for a lot of people. Because you get the equal amount of coins as you did on the old chain as you do on the new chain. So it's essentially free money to a lot of people. And then the other challenges that need to be overcome is theft. Obviously hacks and exchanges is quite a common occurrence now. It's not really something that surprises me or anyone in the space at the moment. You see there have been massive hacks happening quite recently, and a few years ago Bitcoin would fluctuate wildly if something like that happened, but now the price really doesn't seem to care anymore that much. So how do we safely store important wealth and information? Regulatory obstacles, cryptocurrencies still do get a lot of bad press around its use. Some of it justified, some of it I think is just sensationalism. Cryptocurrencies still do get bad press. How might we regulate this sector without negatively impacting the function of crypto markets whilst maintaining decentralization? Now, a common point that a lot of you guys probably know is that governments work in quite a centralized manner. So how is an entity that's centralized going to try to be able to govern a space that is decentralized and hard to control? Obviously, they're going to need to change their strategies from the traditional methods of just slap on a few regulations and hope everything will be good. And in terms of enforcement as well, how are they going to know? And the last one is ICOs, so the rise of initial coin offerings. Now this one, I haven't really said what the challenge is because it's kind of ambiguous. It can be more of a regulatory stance, or it can be also in terms of get-rich-quick schemes as well, because a lot of these, so an initial coin offering is essentially when an organization or a company or whatever will create a token that a token and sell it to raise funds for whatever project they're going to be doing. And the token that you receive can have a utility aspect, it can be a debt security, or whatever you really want it to be. And the issue is because it's such a vast range of ICOs that we have now, poses a lot of problems, not just to regulators, but also to individuals, and how we're supposed to vet through all these ICOs that are coming in. So this one's sort of like solutions to the previous part that I just discussed. So tackling issues, innovative uses of distributed ledger technology, and potential use cases. So theft, we talked about theft earlier. So at the moment there's this interesting ICO called Nuggets. Any examples I use, I don't endorse personally, I'm just using them as examples for potential solutions to the problems that we discussed earlier. So they have a biometric blockchain solution where it encrypts your biometric information, say your iris or your thumbprint, and it stores, encrypts it, and it stores the encryption key on your device locally in a sandboxed environment so it can't be hacked. And it sends out the encrypted packet into the blockchain to be stored. So when you need to, say, sign in to an account, it will fetch that packet from the blockchain and decrypt it on your device locally. Blockless distributed ledgers. Now these don't use blockchain because of the scalability limitations. So you have things like, you may have heard of Hashgraph. That's an interesting one because it uses Gossip Protocol, which was created in the 1980s. So it's essentially when computers talk to each other, but they talk to each other about talking to each other, and talk to each other about talking to each other. So think of it as computers will not be just sharing info about what the transaction was, but they'll be sharing info about when it was, and when that computer sent that transaction, when it was to that. So it's really elaborate. The next one is privacy. So this can also pose a problem, but it's a solution in many regards. Coins such as Monero and Zcash, they do it in different ways, but they are they pretty much the benefit in them is privacy, untraceable transactions. Obviously, that this is great news for money launderers, but but also great news for private individuals that want to protect their privacy and not want anyone to know about something. So. Another point is a secure payment system, so more efficient mining algorithms. You have, similar to Hashgraph and quantum tangles, physically backed crypto assets and asset management. So this, an interesting example of this would be the Digix DAO. So the Digix DAO is a decentralized autonomous organization, which is, and what their product is they're doing gold-backed cryptocurrency tokens. So 1 DGX would be equal to 1 gram of gold. I think they're releasing their product second quarter this year. But that's a solution to, because it'll be great for auditors to be able to utilize blockchain technology to see if a product is actually there, because it's incorruptible, you can't change the numbers. And I thought that would be an interesting example to put in. This also goes along with distribution and tracking of goods and services. So this applies a lot to, especially to the procurement industry, of buying products and tracking and managing all your products for accountants and that. Atomic swaps. Now this is a very interesting one. This relates directly to smart contracts. Now a smart contract is essentially a smart contract that pretty much what it does is it honors the conditions set if a certain condition is met. Now you can utilize smart contracts and atomic swaps, which is essentially cross-chain trading. So you can sell your cryptocurrency for another cryptocurrency without the need for an exchange. It's done directly through a smart contract. So the benefit in that is that there's less likely a lower likeliness of hacks happening, because it acts kind of can also act like an escrow as well, and also governance, which is an interesting one, because if we can have a decentralized governments, there'd be less point of failures for them. Now, potential impacts on industry. So, just like to point out real quick is that there's a relatively low liquidity in cryptocurrencies. only 1% of the world's population has adopted cryptocurrencies, which was the same rate of adoption as the internet in 1996. And that was before the dot-com bubble burst, so you can take that into consideration as well. So it's important to point out, just so you guys know where the technology's at and the way it's advancing forward in relation to what I'm going to discuss now. So blockchain technology, the effect on traditional monetary financial banking practices. So this was initially sent out to do. Cloud computing and storage, ease of use, flexibility and efficiency to the customer. Now the benefit in this, I actually heard there's interesting cryptocurrencies that allow you to store, they allow you to mine the cryptocurrency using hard drives or SSDs or any kind of storage medium. And the benefit in that is it uses much less electricity than a traditional coin, cryptocurrencies like Bitcoin would. I think one transaction in Bitcoin is 800 watts of electricity, which is quite a lot. Asset management, so utility of the blockchain of tracking products. I mentioned that earlier and its impacts. Decentralized fog computing, so that can be used in, for example, science simulations, decentralized web applications, and many more potential use cases. So if we can make web applications more decentralized, less point of failure, it's faster, and it's more fair because of the way it's distributed. So it can be in terms of people can, I've heard of projects where people can actually rent out their bandwidth and have people pay them. So if you have your internet connection, you can kind of rent out your internet connection for some kind of decentralized hosting services. Quite interesting concepts, as well as impacts on media and advertising, because a lot of these ICOs are set out to eliminate the middlemen when it comes to advertising. Those are just some specific ICOs, and that's so it's more fair amongst people, so it's distributed in an even way. So now this is the part that really interests me, is charts. So I just thought I'd point that out there because in the stock market, it's vastly, it's vastly dominated by bots. But nowadays, but in cryptocurrencies, it's quite the contrary. We still have bots in cryptocurrency, but not to the level of automatic trading that you have in Wall Street. So that's a very important chart I thought I'd point out. It's the Gartner hype cycle. You may have seen it before. And essentially, it's pretty self-explanatory, but it applies to a lot of trends, not just short-term, but also long-term trends as well. This is kind of like the dot-com bubble, as we've seen as well in the past. Now, this is a bit more in perspective. So what Gartner have done is they've placed all these technologies along this charts cycle to show you where the technology is at different points. And lastly, that was more of a placing technologies on that scale. This is more placing more of a market analysis of it, more economic relation to that chart. So you could maybe possibly compare that to where Bitcoin is at the moment, and understand how traders think and what kind of strategies they come through. So you can see there a lot of interesting trading strategy is bounce playing or swing trading, and that's when as soon as the media begins to pick up in the market, that's when a lot of the new investors begin to come in, and these are the inexperienced traders. We like to call them normies. And what happens is it reaches that point of greed, and you'll see that the seasoned and institutional investors will be the ones selling to them at the top of the cycle. And what ends up happening is once they sell to those people, it causes the price to take a sudden dip. Those inexperienced traders will end up panic selling, and the institutional investors and the seasoned investors will buy back that initial bounce during the bull trap period. And this also applies to just not just long-term trends, but short-term trends, as I said earlier. And now, these are just some tools I use. So indicators, you have relative strength index, which shows you whether a product is overbought or oversold. So 100 will be overbought, overbought, and under 20 would be oversold. Now that also goes hand in hand with volume, so it shows you to show the impact of relative strength indicator, the RSI change. So you can take it from a given time period, so you can have a 1 hour RSI, a 12 hour and a 24 hour. And the impact that has is that, say, if all the RSIs are oversold and there's no news or reason for that to happen, then that would be, and the volume is, has increased, then that would be, volume has increased, that would be the potential for a bounce play, so you could buy into that and the price would take an initial bounce and you could make a quick buck off that. You have things like MACD, simple moving average and exponential moving average. So MACD is just when your moving averages cross. And in that picture there it shows, so if you have the moving average of a shorter time frame cross into a moving average of a longer time frame, say a 20-day goes into a 100-day, that signals a bearish move. If it's the other way like there, it signals a bullish move. Fibonacci retracements let you see whether the price is going. So essentially what Fibonacci retracements that you do is they let you visualize what the potential is for a bounce and potentially make a buck off that. Less is more, think logically and don't trust your gut. Actually, a friend of mine told me that a lot of the, there's studies that show that bacteria in your gut can sometimes influence your emotions and behavioral decisions. But what's interesting also is that the reason why you shouldn't trust your gut is because if everyone thinks the same way and follows their gut, you are going to be the ones that lose money. People that think differently are the ones that are going to make money. So my dad, talking to my dad last night, and he was telling me, he's like, oh, it's terrible, so many people are losing money just because they're thinking the same thing. And I'm like, no, it's not a bad thing, it's a good thing, because we get to make money. And I guess that wraps it up really there. And I guess I'll leave you guys with that. I think that puts it into a great perspective of what I do. Thank you for the
Thank you, Hadi. I think it's safe to say he has a very bright future. I'm sure there will be a test later about Bitcoin and cryptocurrencies. Hadi did touch on something that fascinated me. Later on, we're going to be talking more about social procurement as well as sustainability. One of the challenges of cryptocurrency and Bitcoin in particular, or the whole concept of blockchain technology, is the amount of energy it consumes. He identified that one cryptocurrency transaction takes 800 watts. Well, put that together, if only 1% is taken up, they've already estimated that cryptocurrencies around the world consumes more energy than a small country. Just to put that into context. So we do have some challenges ahead of us if we're going to embrace blockchain technology. But certainly cryptocurrencies is a fascinating subject. Hadi, thank you. That was a brilliant presentation. And I'm sure he'll stick around during the break. So please introduce yourself to Hadi, ask him those burning questions, and thank you so much for being with us. We're running a few minutes behind, but I think it's been well worth it. I could now invite you to take a break. Could we please